we're in the second half of the fiscal year now. Your own sense of where the outperformance can come in from in the next 5-6 months odd within the sectors?
Great questions. I think this is, I would actually say that the market at the moment is in a twilight zone, in the sense that the first half of the year has pretty much gone in macro noises, whether it was elections, whether it was heat wave, and a whole bunch of the seat count and whatnot. From here on, from a domestic standpoint, it'll be all about numbers, and hence very company specific, very sector specific. I do expect industrials to make a comeback in the back half of the year, and I do expect that as we get towards the back half of the year, some of the rural economic driven sectors would actually come to a bit of life as more and more as the monsoon turns out to be better. Barring those, I think the big event that we as market from a macro standpoint will now have to grapple with is basically potential rate cuts in the United States and the outcome of the US election. If of these two, I think both of will have policy ramifications for the country and the stock market. But I think the rate cuts going forward would certainly have play out in the form of certain sectors doing better than that of others uh, over the next 6 9 months. In that context, we have been overweight NBFCs, non-banking financial companies, where overall the loan book is fixed, and hence from that perspective, as rate cuts tend to happen, they stand to benefit from them. So on net balance, to answer your question, three sectors, two fundamental and one macro driven. Fundamentally speaking, we expect industrials to come back in the back half of the year. And as I said, rural focused companies should stand to do well in the second half. And as a beneficiary of rate cuts, maybe NBFCs could stand to see better days in the sun over the next 6 9 odd months.